Here. Best Wednesday. As always, thanks for tuning in. If you're on Facebook, definitely let StreamYard know who you are. Comment, say hello. Let me know if you're live or watching on the replay. On Instagram, comment, wave, whatever you got to do. And if you're on YouTube, head over to my YouTube channel. Just search my name, Jeremy Kane, and give me a subscribe, like, comment, whatever you can do to help. Is always appreciated. So today, we're talking about nationwide year-over-year appreciation over 19%. That's in a study that came out by CoreLogic. They do a ton with the real estate statistics nationwide. So here we are in an economy that's certainly uncertain. We have the government possibly shutting down. We have the Federal Reserve saying that they're happy at where the inflation has gotten to, and they're going to start pulling back from mortgage-backed securities. What's that mean for us? Well, we'll see. Time will tell on that. Likely interest rates will not be at record low forever. And as they start to pull back from mortgage-backed securities and paying for those on the back end, we'll definitely see a little bit of changes in the lending world for sure. But let's talk about this appreciation. And the honest truth is, since I've been in the business, I have heard client after client talk to me about, oh, we're just going to wait. When's these foreclosures coming? When is the housing market going to crash? And the honest truth is that those people have lost out on so much appreciation and so much, free money that, it hurts my heart. So it's not just going to be one of those get in now, blah, blah, blah. But the bottom line is now we have, homeowners that took the chance and purchased a home and have been living in it for, years and years, or maybe just 1 year. Benefit, their home went up 1/5 in value pretty much over the last year. And so what's that really mean? Obviously, when you're in a loan, it's not all liquid. We talk about, you can do a cash out refinance as rates go higher and things like that. That's not necessarily something we want to do. There's HELOCs, which are going to be pretty volatile rate-wise here in the coming months, I believe, and year. So, the honest truth is what your house is worth right now, unless you're selling, it doesn't really matter. And so that's one thing we're going to take, and we're going to turn it around on the other side. Will there be a market correction at some point? I would assume. Bonito, what's up? Hope you're doing all right down there in Louisiana. But yeah, that's absolutely something that we need to focus on. Okay, there's going to be a correction. Well, in the worst market correction, the crash in 2008 of the real estate market caused by poor lending practices, caused by this industry, the homes went down in Colorado less than 19%, and they just raised 19% over the last year. That goes with, between 3 and 8% the last few years. So that is something that we need to really work through as, people continue to have that fear of jumping in. And the bottom line is, if you don't sell at the bottom, you're fine. And so when we're talking 19% appreciation, I mean, if you have a $500,000 or $400,000 house, $500,000 house, it appreciates 20%. It's now worth $600,000. You made $100,000 in a year. That's a pretty good career for a lot of people. And that's not promised forever, but just by, taking that loan out, making those mortgage payments, you've made $100,000 and you've had a place to sleep for 365 days. So that's something, that we all need to consider. Obviously, in other markets, tone it down to, $250,000 house. That's $50,000 in a year, at that level. So as we continue to work through this, now what do we do, right? As sellers, do you pull out? Do you finance your house to the gills? I would not do that. Do you sell? But if you sell, where do you go? And so with all this uncertainty and everything else, I would say that buying a home is definitely what you should do if you have not yet. Now, if you're in a home and it's not going to be something you love forever, jump in on these, find that long-term home, because these interest rates, regardless, they go up a little bit, still pretty low. You're going to have rates in the 3s and things like that. Those are definitely options. Not to mention, you can pull some of your equity out. You can, roll it over to the next house. But those are all things that we need to really consider, because as we go and we talk about the wealth quadrant and things like that, passive income is absolutely, residual income is one of those portions of the wealth quadrant that is absolutely important. And the thing is that you don't have to be some business CEO or anything like that to obtain residual income. All you need to do is buy a house. You buy a house with a low down payment. And the best part is that your wealth grows on the total amount of the asset. It doesn't grow on your investment in the asset. So if I buy a house, 5% down, whatever that may be, say it's $100,000 house, 5% down is $5,000. My house would have grown on $100,000, so I would have gained $20,000 in equity versus my $5,000, which would have been $1,000 in equity. So if you're interested in the wealth quadrant and things like that, and you want to build wealth, real estate is absolutely the number one key. And residual income, something that we talk about in business, and it's kind of an off, in the distance thing for most people. But here we are in our houses that we take care of every day. We pay the mortgage, we live in, and we have this passive income opportunity. And this year, it was great. It was a great return, 19%, and that's nationwide. So that's factoring in some of the, hardest hit COVID areas that have had issues. That's factoring in everything. Denver went over 19% last month in year-over-year appreciation. So I don't care what investment you're in. Very few have gone up year-over-year 20% or close to 20%. So just take some time, figure it out. Like if you are one of those homeowners that had it and had the asset and continued to hold on to it, and now you're like, okay, well, I just made 20%. Maybe I do something different. Now's the time, make a move, but you have to have a plan to move forward. If you're not in it, regardless of if we see a correction or when we see a correction, if you get in now, take advantage of some of this appreciation as we go. All you have to do is hold on through the downturn and you'll be okay. There's everything you want to hear in the, anywhere, even in the headlines, of all the news stations that we don't love to follow all the time. There's stories of, okay, if you would have bought a house before the 08 crash, say 05, and you would have held on to it, it's now worth 98% more than it was at the peak before it hit the crash. So if you just hold on, you're able to make that payment, you hold on to your employment, and you make that a priority, your home a priority, then passive income will continue to go. So I hope you guys, if you have any questions, let me know. My whole point is, in this market of instability, you read on the news, you don't know what's going on. You got Afghanistan, you got pandemics, you have all this, government shutdown, IRS in your bank accounts and things like that. Home appreciation is something that, it's not promised, but it's just an added bonus and a way to earn passive income and not have to, it's passive income that you don't have to pay taxes on to a certain amount for now. So definitely something to talk about. If you have any questions about what I've said, let me know. We'll jump into the sports world here. How about those Broncos 3-0? It was nice to be in the stands with fans this past weekend. Shutout by the defense, so shout out to them. And as we move here, almost October, we're into basketball and hockey season, so we're excited about that. The Broncos got the Ravens this week, and I got the Broncos winning a tight one, 17-10. So we'll see how that goes. Book it, as I said. Normally, Broncos 17, Ravens 10. The injuries are just too much for those Ravens. So we'll see. Go Broncos. Let me know if you have any questions about the real estate market, and keep taking advantage of that record high appreciation. It's a gift that won't be there forever. It won't be record high forever, but homes typically appreciate. So let's chat about that soon. Hope you have a good Wednesday, and I'm out of here.